Rohr here with early concise highlights on Wednesday, November 26th, 2014. It's currently 6:45 a.m. U.S. Central Time, and this will be concise today because in spite of it being a couple days, most of the foreign exchange view is exactly the same as our global view from Monday morning. So what does all this mean to the markets? Well, that QE factor is very interesting insofar as it is keeping the equities and government bond markets bid together. And we've been focusing on that for about the past 2 weeks now, where it became obvious, along with the weakness of energy prices, there are multiple stimuli out there that are in a position to bring an anticipatory bid to equities once again. At the same time, the govies like the weak news. In equities, bad news is good news is a bit of a tongue-in-cheek saying. In the govies, it is just the way it normally is. And what we see here is a market in the S&P 500 that is up against the 2070 topping line on the weekly chart. Last Friday, when it was at 2065, it exceeded it pretty nicely on the gap higher opening off the Chinese rate cut influence and all that, but then sagged back and left a critical high up here at 2072.5. Well, note where the market topped yesterday when it was strong early in the day and didn't quite get back through it. And it's going to be very interesting through the course of the day today that the aggressive up channel starts off at 2063 this morning, but by the time the market closes, the pre-holiday close, it's up to 2069 more or less, above almost all the recent trading and right around the 2070 area. So we've got quite a bit of tension in the trend of this market right now,